Are you disappointed with your mutual fund returns? Did your fund fail to beat the benchmark returns like Nifty 50? Do you want to manage your portfolio yourself effectively using a simple strategy? If this is your investment criteria, then you must watch this video completely. Hi, welcome to PSI, Plan, Save and Invest. There are few demerits doing SIP, Systematic Investment Plan. Firstly, we all know that Systematic Investment Plan is the simplest and best way to invest in equities, but it has its own problems. Most investors do monthly SIP. They give a mandate to the mutual fund house directly to debit their bank account every month. For example, ₹5,000 on 5th of every month. All good, but assume you are a smart investor and you are investing in best performing mutual funds, which means most of the stocks in the portfolio are in a bull run. So every time you do SIP, the portfolio manager might be buying them at a higher price. But I love to average at lower prices, buy on dips and time the markets. I like to keep my buy average as low as possible. This way the long-term returns on the investment can yield more than expected. Unfortunately, with mutual funds this is difficult. We have to choose a particular date on every month and do SIP, irrespective whether stocks are trading at a higher price or lower price. Secondly, even after much research in choosing mutual funds, most of the funds fail to beat benchmark returns like Nifty 50. This makes me think, even after paying advisory fee and management fees, mutual fund schemes do not justify our investment. Assume we are having a financial instrument that has an average annual return of more than 20% and carries low to moderate risk. I would love to invest in this instrument and build a portion of my portfolio in this instrument. Currently, this opportunity is in Nifty Bees. They are an ETF that holds a portfolio of Nifty 50 large cap stocks. We all know that Nifty 50 has a track record of 18% to 25% returns per annum. And large cap stocks carry low to moderate risk. Almost 80% of mutual fund schemes fail to beat the Nifty 50 returns. This made me to think, instead of spending a lot of time in choosing and investing in mutual funds, why don't we build a portion of our portfolio directly in Nifty Bees? This is low cost investment, easy to invest, and we have an opportunity to time the markets. The motive of this video is to talk about timing the markets. Whether you do SIP, Nifty Bees or small cap funds or mid cap ETFs, it's up to your choice. But you can still use our analysis. Okay, coming back to our analysis. Based on the facts and research, we consider doing SIP in Nifty Bees is simpler. The ETF carries low to moderate risk, and we also have a choice to buy on dips. We do time markets using simple tools like Mlin Oscillator and 50-day moving average. This method can help us to keep our buy average as low as possible, irrespective whether it is a bull run or bear market. Okay, Nifty Bees. Nifty Bees are exchange traded funds. Their portfolio holds Nifty 50 large cap stocks. They are considered passive mutual funds. Systematic investments in Nifty Bees is simple. You just need to have a demat account with a discount stockbroker, so that your costs are as low as possible. Unlike e-mandate, you do not need to authorize external parties to debit your bank account. In case if you are short of funds on the SIP date, you no need to worry. The direct investment in Nifty Bees gives you flexibility to invest when you have money. Unlike mutual fund investment, ANC is not going to allocate the units. Number of units purchased is totally up to you. Unlike mutual fund investment, direct investment in Nifty Bees let you time the markets, so you can buy on dips. So these are the advantages of doing SIP in Nifty Bees. Now coming back to the timing of the market. We choose two methodologies to time the market. One is using daily moving average or exponential moving average. This is a traditional and highly effective way to time the market. Most analysts and traders use either daily moving average or exponential moving average. The methodology is very simple. Buy Nifty Bees whenever Nifty 50 index approaches 50-day moving average on the daily chart. the easiest way to keep an alert on your mobile application. Most discount brokers offers this feature. So the methodology is very simple. Buy Nifty Bees whenever the Nifty 50 index approaches 50-day moving average or 50-day exponential moving average on the daily chart. But the problem with this method is most of the time Nifty might not touch 50-day moving average. Also tracking can be cumbersome. But when Nifty approaches 50-day moving average, the whole market panics. News circulates all kind of negativity. This makes us unsure whether Nifty holds 50 DMA or it might correct further. So we will be like in a confusion whether to what to do at that point of time. So to resolve this problem, we use another indicator called Mlin Oscillator. This is a breadth indicator. Sherman and Marion Mlin developed the Mlin Oscillator. It is a breadth indicator derived from net advances in Nifty 50 stocks, which means daily we take the record of how many stocks went up advanced and how many stocks declined in a day. Suppose in Nifty 50 today 30 stocks advanced and 20 stocks declined. We consider 30 stocks as advanced stocks and 20 stocks as a declined stocks. This is the number of advancing stocks in a day minus the number of declining stocks in a day in Nifty 50. To learn more about this indicator, please watch our video on market breadth indicators. Okay, this indicator oscillates between plus 100 to minus 100. Plus 100 indicates most of the stocks in Nifty 50 are under overbought condition. So monthly SIP it is not wise to do when Mlin Oscillator is plus 100. So it is wise to avoid buying Nifty Bees when Mlin Oscillator is around plus 100. So this is how we avoid buying stocks or investing when the stocks are trading at higher price. Doing SIP when stocks are trading at higher price. Minus 100. This is our sweet spot. When the Mlin Oscillator reaches minus 100, we will be ready for the next round of investment, that is SIP. As per our observation, the ratio reaches minus 100 when Nifty 50 is down by 5% approximately. Truly speaking, we are buying or doing SIP Nifty Bees whenever Nifty is down by 5%. We observed in the past 6 months from 1st November 2023 to 23rd April 2024, Mlin Oscillator reached minus 100 6 times. We also observed that whenever Nifty approaches 50 daily moving average, this indicator reaches minus 100. So this acts as a second confirmation to do SIP in Nifty Bees. The problem with Mlin Oscillator is in its complex calculation and data availability. You might not find this oscillator easily even online. Don't worry about this. We will post the graph and indicator on our website psinc.in, which is coming up soon. Also, we will keep an alert by posting on YouTube stories when the ratio reaches plus 100 or minus 100. I would like to conclude, as we always tell you, this video doesn't recommend buying or selling any asset. We want to give active investors more information. It helps them make their process simpler. Mlin Oscillator. This indicator is very effective in timing the markets. We will alert you posting stories whenever the indicator reaches plus 100 and minus 100. We observed that most fund managers and mutual funds fail to beat the Nifty index or its returns. So most of the traders feel that it is wise to do SIP in simple ETFs like Nifty Bees. If you like our video, do like, share and comment. Thank you.